Welcome to Rogue Trader. Please read the disclaimer and remember that prices can go down as well as up. So I'm now looking at defensive stocks. These are stocks which may not have had a boost from the corona lockdown, but nevertheless won't be expected to do badly even if there is long-term economic turmoil. Now, the S&P 500, I've been using this as my barometer of how the world's doing, and the FTSE 100 does tend to just follow the S&P 500. And ever since the corona crisis, we are still in a situation where we don't know what's going to happen. V-shape, double bottom, proper recession. So I don't want to go taking any risks I don't have to in my next stocks. I plan to be buying about one stock a month during the course of the year. And if I get some defensive stocks next, then I'll know I'll be relatively safe going forward. We can see that the FTSE 100 has behaved a little better than the S&P 500, but it's a similar pattern. So to create a short list of stocks to look at, I started off by defining defensive sectors. These are stock sectors which are known to perform relatively well during bad times. So of course the defense industry is a defensive sector. Governments still have to spend money on armies even in bad times. Then beverages, people still drink fizzy pop. Electricity generation and distribution, food and drug retailers, people still go to the supermarket. Food products, household utilities, healthcare, people are still sick even in recessions. IT services, medicines, mobile telecommunications, and the tobacco industry. People still smoke even when they're on the dole queue. So this gives me a nice list, short list of sectors to look at. But then how do I pick individual stocks? That would be like a couple of hundred stocks if you just had them all. So one website that I've been using a lot is the London Southeast. Here it is, the London Southeast website. And this is a great website for looking at stocks and seeing people's comments on stocks. And they have a great tool on there called the stock picker, which is basically a stock filter. And what you do in the stock filter is you add different parameters. So I've added the defense industry as the sector parameter, and then the FTSE 350. So I want to look at all stocks in the FTSE 350 that are in the defense sector. So you click on search, and then it gives you a list of stocks that are within this sector. So what I did is I got this list, and then I went over to the London Stock Exchange website. And in the London Stock Exchange website, you can look up every stock and go to fundamentals, and then you can get all their numbers. So what I did was I went through all of these stocks and then quickly scanned through their numbers. Now, what I've done to narrow it down is I've gone through all of those stocks and I've looked at, is their revenue good? Is their net income growth trend good? And do they have good net assets? So we can see here the revenue, and for Kinetic, yet the revenue has got a nice upwards growth trend. The profit for the period, which is their net income, again, quite a good uptick. And then the net assets, that's down here. You see here the net assets, again, a very, very nice net asset growth for Kinetic. So in this way, I've gone through all the different stocks that I've got from a stock picker in all of the sectors, and that way I've managed to cull it down to just a few stocks in each sector. And that way you've got a good starting point because you know that at least the stocks you've narrowed down have got these basic things right. However, I still had a few too many. I wanted to cut it down to 10 stocks. So then what I did is I went through again and for each of the stocks I had left, and I looked at just the debt that they have, particularly their long-term debt versus their assets. So as you can see for Kinetic, so I looked at their debt, which is really their non-current liabilities, and borrowings is basically loans that they've taken out, which for Kinetic was nothing practically. And then also they had some other things. They had other non-current liabilities, but still overall we're looking at only 100 million in terms of long-term debt and non-current liabilities, and that squares up very nicely against their overall assets, or their non-current assets, which are about 0.8 billion. So that way I went through each of these stocks and then deleted the ones that had a bit too much debt for me to be happy with. It's a shame, isn't it, that I had to delete Ultra Electronics because that's quite a cool name. So yes, so this way I've got myself a short list of 10 stocks, which I know have got the basics right. And in the next weeks, I'm going to start analyzing these defensive stocks.